What will the next year hold for crypto? It's rounded up predictions from intelligent people. From the bullish to the skeptical, is cryptocurrency going to soar, plummet, or tease investors along an unpredictable path for the predictable future? Can Bitcoin continue its volatility? Is there any chance to play a more significant role in regulation? What type of cryptocurrency will be the best bet this coming year? There are as many predictions as analysts are charting the future of cryptocurrency, which will be benefited you in your future investment journey. The crypto market and the future. So called for using cryptography principles to mint virtual coins, cryptocurrencies are typically exchanged between people with virtual wallets on decentralized computer networks. These transactions are recorded publicly on tamper-proof ledgers and distributed as blockchains. The open-source framework prevents coins from duplicating. It removes the need for a central authority such as a bank to validate transactions. Bitcoin was created in 2009 by pseudonymous software engineer Satoshi Nakamoto. It's the most prominent cryptocurrency, and its market capitalization has peaked at over $1 trillion. Numerous others have increased recently, including Ethereum, which is the second most prevalent. Cryptocurrency users send funds between digital wallet addresses. These transactions are then recorded into a sequence of numbers known as a block and confirmed across the network. Blockchains do not register real names or physical addresses, only the transfers between digital wallets, thus conferring users complete anonymity. Some cryptocurrencies, such as Monero, claim to provide additional privacy. However, if the identity of a wallet owner becomes known, their transactions can be traced. Crypto continued its popularity in 2021 and became accepted by Goldman Sachs. The first significant crypto company to go public, Coinbase, debuted in April 2021 and launched the first US exchange-traded fund linked to Bitcoin in October. According to CNBC, the best-known cryptocurrency, Bitcoin, had a good year. The digital currency has been nearly up 70% since the start of 2021, driving the entire crypto market to a combined $2 trillion. Bitcoin miners earn coins by organizing these blocks, thereby validating transactions on the network. The process requires a system known as proof of work, based on using computers to solve math problems. Many cryptocurrencies use this method, but Ethereum and some others instead use a validation mechanism known as proof of stake. In Bitcoin's case, a transaction block is added to the chain every 10 minutes, at which point a new Bitcoin is awarded. The reward decreases steadily over time. The total supply of Bitcoin is completed at 21 million coins, but not all cryptocurrencies have such a constraint. The prices of Bitcoin and many other cryptocurrencies vary based on global supply and demand. However, the values of some cryptocurrencies are fixed because other assets back them. Many currencies were knocked from their pegs during a spate of volatility in 2022, while these coins tend to claim a peg to traditional money. Crypto market predictions for 2023. Looking at cryptocurrency's future, investors are in for an exciting ride if the past is any indication. Imagine back to 1 year ago. Bitcoin traded at around $50,000. You couldn't watch sports without seeing a crypto advertisement. You could get rich, or at least it felt that way, by minting your left nostril's non-fungible token. At the time, who could have predicted the collapse of Celsius Network and Voyager Digital? Or that Matt Damon would become a crypto punchline? Or would the space's golden child Sam Bankman-Fried turn from Anakin Skywalker to Darth Vader? This is all prefaced to say that there are no crystal balls. Predictions often need to be corrected. Trends can change on a dime. But then, after the FTX-flavored gloom of the last 2 months, speculating on 2023 is what we need to cleanse the palate. You can clearly understand the crypto market by mentioning what happens with crypto funding will be judgmental, as to whether we stay in a sustained bear market as we enter 2023. On the one hand, the power of the venture market has persisted, with billions of finance still pouring into the space. High levels of capital are waiting to be installed. Because of that, we can see a record number of applications in the most recent cohorts for 2022. Then again, the venture landscape is unquestionably changing. Fund managers are conserving capital while going into 2023 instead of the bull run strategy of spray and pray. Many investors will double down on existing next year. Less risky investments from later stage companies already show growth. As to what that could mean for the space at large, or how else might crypto crush and turn in 2023? We've accumulated predictions from intelligent people in the room, from the bullish to the skeptical. Number 1. Epic battles over regulation. The required outcome is anyone's guess, but 2023 could be when the clashes of overregulation finally reach their climax. There's going to be grading crypto regulation proposed. There will be a grand conflict to fight the parts of it that threaten decentralization by the community. Number 2. Web3 platforms continue to grow. Larger macro downturn market conditions should shift crypto projects away from speculation. Those must be more towards utility. One main utility category simply being meaningful, fun, and social experiences, or meaningful Web3 social platforms and protocols. It can foresee growth in interoperable identity on-chain social graphs and crypto-abstracted social experiences. And for a less optimistic take, number 3. More bleeding, more losses, more pain. The contagion isn't anywhere close to over. Companies, banks, and funds desperately hope the market moves past the FTX Alameda collapse or strictly focuses on their misconduct. But whether people like it or not, you can't wish away a credit crunch and exposure to bad counterparties. We will see the closure of funds and the faltering of companies we didn't expect, mostly simply because the contagion is too vast and too difficult for us all to quantify. Number 4. Government-issued crypto is real. Nations will see their currencies less viable or valued to other countries looking for safe reserves as more and more reserves are moved into crypto assets. Just this week, the US Federal Reserve publicly announced that this is an approach they're considering. Wise nations, likely minor, will launch their crypto fiat currencies, digital currencies on a ledger with the creation and distortion controlled by the government and presumed parity between the government's money. While this misses the prominent point of digital currencies and may be a short-lived tweener state, it will create short-term demand for that nation's currency as easy to hold, easy to move money backed by a government. Number 5. Focus on life outside of crypto, Bitcoin, or blockchain. Real Bedford will win the league. This is a cheeky joke, but this might contain the kernel of a more profound truth. It's functional or even healthy to focus on other interests for many in the space during the crypto winter. Number 6. Web3 gets fashionable. Fashion will continue to lead the way regarding Web3 adoption. It will observe more combinations between Web3 personalities and consumers, as well as luxury brands that want to find new commerce models and customer touchpoints. Blockchain plays a significant role in helping us distinguish between AI and content created by humans with the rise of AI. Number 7. Don't count out NFTs. The sustained high-risk appetite for NFT funding in 2022 is a strong indicator. It will be one of the first sectors to recover next year. Throughout the past year, it's already beginning to see major NFT investments from major Web2 brands like Starbucks and Disney, and across Web3. This shows no sign of stopping in 2023. Brands will continue to flock to NFTs. Number 8. Gaming and DAOs continue to grow. Prominent Web3 game titles that have been in development for quite some time, including Big Time, Star Atlas, and Ember Sword, will finally see the light of day in 2023, either as full-fledged games or more playable demos. As for decentralized autonomous organizations, DAO, although it may seem that the current bear market has forced the industry to pause, the growth of new DAOs has accelerated exponentially, with each new month in 2022 producing more new DAOs than 2021 witnessed altogether. Number 9. The big exchanges become disaggregated. Exchange stack gets disaggregated. We see custody, brokerage, and exchange or price discovery get broken out into different players, just like in traditional finance. This makes it impossible for another FTX to happen. When trust is low, incumbents consolidate. Coinbase, Binance, and Uniswap will likely gain market share in aggregate as people are less likely to trust smaller and weaker players. Network effects get stronger. Number 10. The space regroups. Read the room and assess the damage. Who then advises the space at large? Regroup with humility, rebuild with integrity, regain trust, and rise again. Number 11. Nations stockpile crypto weapons. As crypto becomes critical infrastructure, replacing much of the existing banking system, governments will seek to regain control. Crypto weapons could have many forms: mining attacks to reduce transaction throughput and cause chaos, attempts to break and discredit individual currencies, backdoors to control mining infrastructure, secretly launching their crypto with backdoors built in, or simple quantum computing to brute force the existing money supply before maintainers could react. What's clear at this moment is just as cyberspace became a new battlefront, so too will battles be waged for control of and access to distributed value technologies. That's it for the video, guys. I hope you enjoyed this video. Press that like button if it did, and comment down your thoughts on it. Share the content to spread the good content. Subscribe to the channel for more amazing content. See you in the next one. Peace out.